Good morning, everyone. We'll be starting the session just in the next 10-20 seconds. Participants are still joining. Okay, so we're good to go. So good morning, everyone. Welcome to today's session of Pre-Bell with William O'Neill India. I hope everyone's doing well and all geared up for today's session. And before we start with the session, I'd like to give a small disclaimer that any security that we'll be discussing in today's session should not be considered as a buy or sell recommendation and should be just taken for educational purpose. So without taking much time, I'll start with Nifty 50 chart analysis for the week, for the day. If we talk about the last week, we had two distribution days. Even the global markets was under tremendous pressure on account of higher CPI numbers from US, and that's what is pricing in around a 75 bps rate hike from US Fed in this week's meeting as well, which led to even your Dow Jones, your S&P 500, and your Nasdaq declining by around 4 to 5% in one of the sessions last week. But Nifty was still resilient on that day itself, but came under selling pressure for the next couple of days and we did mark two distribution days in the last week session. And Nifty did breach its 21 DMA, and the current distribution day count stands at 3. If we talk about yesterday's session, Nifty had a flattish opening, then had then went down by around 200 points, made a low of around 17,400. Let me do some chart annotation. And post this made a strong recovery, but found resistance near this green line. So this green line is the 21 DMA, and that is where it found some resistance and wasn't able to move ahead of it. So these lines, which probably acted as a strong support when Nifty was above it, is acting as a resistance when Nifty is trading below them now. So according to probably the SGX counter today, Nifty probably should take out this 21 DMA line, and if moves forward, can probably take out this 10 EMA line as well, depending upon the momentum in today's session. But the major momentum would probably come in, or the momentum would break probably after the meet. The meet of US Fed that happens on the Wednesday and Thursday. So this overhead supply is still there. So probably till the time this overhead supply zones are probably cleared out, Nifty is likely to remain volatile going forward. So talking about key news, Crompton Greaves approved the sale of 6% stake in subsidiary, but Butterfly Gandhimathi Appliances via an OFS. Bombay Dyeing Board approved to consider fundraising via rights issue on September 22. Euro Capital Board to consider and approve raising funds by issuance of NCDs via private placement basis on September 22. Adani Enterprises raises rupees 100 crores via NCD. The Kotak Bank listed itself as a payment gateway on the recently launched Income Tax Department's TIN 2.0 platform. It allows customers of all banks to pay direct taxes via a variety of modes through the bank's payment gateway. So talking about FI and DI flows for yesterday, FI bought Indian equities worth rupees 312 crores yesterday, and DI sold equities worth rupees 95 crores yesterday. Talking about the global market update, the US markets had a gap down opening yesterday, but remained highly volatile and recovered sharply in the second half of the trading session and closed around 0.6 to 0.8% higher. Dow Jones closed by around 0.6% higher, S&P 500 by 0.7% higher, and Nasdaq by around 0.8% higher. Taking cues from the US counterparts, even Asian markets are trading higher by around 0.4 to 0.5%. Shanghai Composite by 0.5%, Nikkei by 0.4%, and Kospi by 0.4%. On the crude oil front, after making an intraday low of $87-88 a barrel, crude oil recovered and it was trading around $92.13 a barrel. USDNR appreciated minorly to close around 79.65. 10-year treasury yield did hit its highest at 3.481%, but if you talk about the two-year 10-year inversion, it's still there, and the 2-year is still trading at around 3.94%. So what earlier I was talking about was the SGX Nifty counter. So the SGX Nifty is trading around 17.7 to 17.78 around 5 to 10 minutes back, and that is showing a positive opening of around 140, 150 points, and that's good for Nifty, and that will be good for today's session as well. So on the sectoral front, if we talk about it, if you look at it, on the broader index, and not on the broader index, but on the main indices such as your Nifty and your Sensex and the other sectoral indices as well. Many distribution days got added in the last week as the markets came under selling pressure. But many indices are still under the rally, and just IT is in correction at the moment. Energy and auto remains under pressure. But if you talk about it, IT and pharma are the two main sectors which are trading below that 200 DM. So IT is going through its own woes, which we have extensively discussed in the pre-bell session, in the after-hour session, and in the stock darbar session as well. And that's why you can see this the index is trading 12.84%, nearly 12.9, 13% below its 200 DMA, which is sorry for the bad chart annotation. It's not a good sign. And even pharma is trading around 3% below its 200 DMA. All the other sectoral indices is trading above the 200 DMA and mostly above the 50 DMA as well, which shows good strength, currently strength in the broader market as well. But if the selling pressure happens on Nifty or in, then probably some kind of jittery pressure can come in the broader market indices and as well as in the sectoral indices as well. So talking about the chart of the day, the chart of the day is Rhi Magnesita, and before we go ahead discussing about the company, would like to give a small disclaimer that it's not a buy or sell recommendation, and we're just doing it for educational purpose. So it is the Rhi Magnesita comes in the refractory segment, and why refractories are essential to the important world is because it's used in the manufacture of steel, cement, glass, aluminium, copper. All major industries require refractories, and even for this company, the major source of revenue 70% comes from steel, the other comes from cement, 10%, non-ferrous metals around 7%, glass around 6%, and energy, environmental, and chemicals around 6%. But what's good is that if we talk about these costs to the customers, it's just around 3%, 0.5%, 0.2%, 1%, and 1.5% according to the industries that I have discussed. And that is what is the most positive point, is that the factories are essential for the end user industry. Without them, they cannot function, and the cost to them is just minuscule. So these are the kind of industries or the kind of companies one should be looking at. And if we talk about the merger, it's expected to be highly value accretive due to synergies from diverse product portfolio and wider customer reach across mini mills, PSU, and private steel companies. Overall, the revenue growth will be driven by strategy to expand full line contracts under total refractory management services. And overall, if you talk about on the fundamentals front as well, the last few quarters have been really good for the company. Over the last 6 to 8 quarters, if you look at it, you can see strong growth. And even the consensus estimates that being built for 24 as well, it's been really good, of around 20%. There is increase in the number of fund holding as well. If you see a last few quarters back, it was around 43, 44 funds holding. Currently, around 80 funds are there with the stock. Overall, if you look at it, the master score is really good. for the fundamental profile that we discussed, the EPS rating is superb at 93. Even the price strength is good at 76, and the RS line is trending higher. It's a good sign. The accumulation distribution rating, that BAD rating is still good at A minus. So overall, the stock is forming a stage three cup with a handle base, and you can see good accumulation on the right hand side of the base as well. When the stock was moving higher, that's a really good sign with RS line trending higher. At the moment, what's required is that the stock to move ahead of this pivot. Like once it did try, if it talk about this session, and even the volumes was higher, but the stock went back to its base. So let it re-break out. So if the stock re-breaks out on above average volume and is able to sustain above the pivot, then that can be counted as a clean breakout for the stock, and is there in our buy watch list as well. And people who are interested can keep the stock in their watch list as well. So that's it. And thank you from our side. And do stay tuned and do connect with us on the pre-bell space every day at 8:45 a.m. and in the after hour session at 4:30 p.m. as well. So thank you guys.